Welcome to our BAI Investor Survey evaluation. In this episode, we want to take a closer look at a very interesting topic: alternative asset allocation. Alternative asset classes are an established part of the portfolio for most investors. 94% of German institutional investors are allocating to at least one alternative asset class. While the overall allocation differs across investor types, most can already report a diversified portfolio with several alternative asset classes. We see only slight year-on-year fluctuations in all asset classes compared to last year's results. But we can also determine three major preferences. 71% of the investors have an exposure to corporate private equity, 75% to infrastructure and 78% to real estate. Debt investments gain traction and are a warm welcomed addition for the portfolio of German institutional investors. On the other hand, in recent years, hedge funds, liquid alternatives and commodities have had a difficult time. Low interest rate and a steep increase in stock prices have resulted in investors withdrawing from these asset classes. However, the portfolio allocation has now stabilized, and the benefits of especially hedge fund strategies shine now in a volatile market environment. We see a slight increase in commodities and demand for absolute return strategies. This trend reveal is also related to high inflation and rising interest rates. Our estimated alternative investments portfolio allocation reflects the growth of the alternative investment market based on the information provided by the respondents. On a weighted average, about 23.2% of the portfolio is invested in alternatives, which is in line with our long-term trajectory. On an SAA level, we are talking about 26.4% of the portfolio, indicating still an inflow of capital into alternative markets in the coming months and years. So let's take a closer look at the difference between the allocation 2022 and the SAA. In nearly every alternative asset class, the SAA is not reached yet. You can see this at the red curve, the delta between SAA and the current allocation. In conclusion, private equity, private debt and infrastructure as an asset class have the potential to grow even more. It should be noted that this weighted average allocation is largely determined by large investors. Therefore, it makes sense to look at planned portfolio changes, whether investors want to increase, decrease, or maintain the status quo allocation. Our evaluation makes it apparent that investors are looking to increase their allocation in almost all alternative asset classes. Leading the way, they are primarily small and medium-sized investors who want to catch up, further diversify their portfolios, and realize the return potential of alternative investments. This high demand for alternative investments is not a new development, but has been omnipresent for years. The question is whether there is a connection between the demand for alternative investments and the current economic and monetary developments. So, we ask our participants if the current inflation and, in combination, the expected interest rate policy of the ECB result in a shift in the SAA of LPs towards alternative investments from traditional investments. 15.3% say yes, the current inflation and interest rate policy is causing a shift in SAA towards alternative asset classes. 19.4% of our participants have a rather opposite position. They say that AI allocations are going to be reduced in favor of traditional investments. The majority of 65.3% see no influence at all of the current inflation or the ECB interest rate policy. The content of this video is based on our annual investor survey. You can read the full survey at the link in the video description.